had a little technical difficulties here. You see two Scott Rudders. We're both very handsome, but only one of us is Tony. He's the president and CEO of Shield Compliance here. So we'll get that name changed real quick. We're excited to have Tony here with us. Before we get started, I want to make sure that we are thanking our sponsors. So we have, for our sponsors, we have Sprague Energy, our New Jersey Cannabis Association's preferred energy provider, Financial Resources, Federal Credit Union, Curaleaf, Burton Trent Public Affairs, HBK CPAs, Township Green, Saks LLP, Dutchie, Puffin, Canna Remedies, and DM Labs LLC. So I want to thank our sponsors. I really want to thank Tony for joining us today. So President CEO of Shield Compliance, they have a very important job what they do and how they can help our folks here in the cannabis industry. We are a high risk industry, and that's exactly what Shield Compliance does. So Tony, welcome. Thank you for joining us today.
Yeah, Scott, thank you for the invitation and really appreciate it. And just to elaborate a little further, we work with banks and credit unions around the country who are focused on providing financial services to the cannabis industry. And so what I thought would be hopefully useful for you today is to understand a little bit about some of the additional work banks are doing. I know from your standpoint as a cannabis licensed operator, you're like, this seems ridiculous, but providing you with a little bit of color on why banks need to take those additional steps and how that's influencing what they're doing behind the scenes. And then maybe more important for all of you is how to negotiate with your bank. So I was a banker for 25 years. And so how do you then go into the bank and say, boy, this seems a little bit expensive, or I'm needing this help in this area, and understand where the bank is coming from a profitability standpoint, because that helps you to negotiate with them.
I think that's one of the most exciting parts of this conversation, quite frankly, because I think a lot of us that are out there, some of us are previous entrepreneurs and business experience and background. A lot of the folks here, though, are just passionate people. They're passionate about the industry. They want to get involved, but they don't necessarily know how to position themselves with banks. And there's a whole other host of things that they need to present themselves to, mayors of towns and things like that. So I think this transfers across a whole bunch of different areas where you can really be helpful in helping these folks get positioned well, so they know what to say. They know what the customer is looking for. In this case, the customer could be a bank or otherwise.
Awesome. Well, we'll dive right in, and I know, Scott, you'll pepper me with questions as we go, and we'll keep it a lively discussion.
Very good.
I mean, I think if you're in the cannabis industry, you know the challenges between what's happening at the state level, what's happening at the federal level. Every single banker in the country, even if they're state chartered, has a federal regulator. And we all touch, as bankers, these federal money movement payment rails. So the Federal Reserve Bank, and we're working with counterparties, other banks and credit unions. And so we all have to play nicely in the sandbox. And luckily, now almost 10 years ago, Treasury came out with guidance for banks that were planning to serve the legalized cannabis industry and provided a framework for them to operate in. Now, in lots of high-risk industries, there is a special framework set up. So, hey, I've got a casino I'm banking. Gosh, the feds expect you to take these extra steps. Or I'm working with somebody that does foreign currency work. You better take these extra steps. And those are always really well detailed out, and including how the bank examiner is supposed to examine the bank when they come in and look at these specialty lines of business. Well, with cannabis, they couldn't quite put it into that official framework. So instead, they came out with that memo, and you've probably heard about the FinCEN memo. The FinCEN memo, if you boil it down, it really says...
Can you say the FinCEN memo? Can you provide a little, what is FinCEN for folks who are out there?
Oh, sure. So FinCEN is the Financial Crimes Enforcement Network. And so what that is a coalition of all of the different bank regulators, and it's operated out of Treasury as an enforcement arm. So when banks have to report suspicious activity or large currency transactions, they all go into FinCEN, and they become the repository and an enforcement arm for this financial crimes reporting. And a lot of this came out after 9/11 with the Patriot Act. really said, hey, banks, you should be preventing certain illegal and terrorist type activities, and their role has just continued to grow. So the bankers are obligated through their federal regulator, but with real guidance from FinCEN on how these things are supposed to happen. So if you boil down that guidance, it says, gosh, there's some risk in the cannabis industry. This industry operated long before legalization occurred, even at the individual state levels. And so you should really know the people that have been licensed to do business here. You've got cash intense businesses, you've got a pretty large illicit market, and you've got legacy operations out there. And so banker, you should understand who you're doing business with at a deeper level than you do with your traditional customer. And our expectation is you're going to know more about them than you would the guy that owns the the pet store down the street. And so bankers have a number of different things that they do to meet that requirement, but knowing the people at a more in-depth level, and state licensing helps with that, right? The work the licensing agencies do to understand true party of interest also helps in that know the people. And then there's this requirement that you understand the business. So let's take that pet store. Tony owns this little pet store down the street. If I walk into a bank and open a checking account, they're gonna ask me a few questions, right? Well, are you gonna take wires? Are you gonna take cash? How much business are you gonna do? And they're pretty much gonna start relying on my account history to really understand that, yeah, this all seems legal and normal and regular. With the cannabis industry, what the regulators have asked the bankers to do is to say, you need to really be validating on an ongoing basis that the deposits that are coming into your financial institution correlate to the legal sales activity that business is allowed to do under their state license. And so that's where bankers are leveraging things like seed to sale tracking, asking for additional sales reports from you to help better understand the cash flow of the business and then correlate that to the deposit activity that's occurring at the financial institution. And then, of course, we got to make sure those licenses are in place. And if there's some adverse action on those licenses, that we're aware of that. There's a number of priorities that are laid out in that guidance. And if any of those priorities are violated, the enforcement priorities, the bank should take some sort of action. And then government reporting was a really important part of that FinCEN guidance. So one thing they said is, hey, we know these are cash intense businesses and in other industries. So if you bank the grocery store down the street and they are always depositing cash, I don't always have to report that. I can get an exemption. Hey, they're a grocery store, I know they do cash. The Fed said no exceptions for cash reporting. So bankers have this obligation to go ahead and file on all of your cash deposits that meet certain criteria. And then they also said, hey, you should file suspicious activity reports on these businesses, even if there's no identified suspicious activity. The fact that they are in the cannabis industry is suspicious enough for us. And so it really becomes almost a CYA, sort of cover behind exercise for the bank. But there are times where real problems are identified. And there are priority SARs that are delivered, then suspicious activity reports. And when relationships are terminated, we're also obligated to share that with the government. So that guidance outlines that suspicious activity reporting. So think about this. We have a banker that we work with who has, 100 cannabis customers. That means every 90 days, they're filing 100 suspicious activity reports. For the whole bank prior to cannabis banking, they didn't file 100 suspicious activity reports in an entire year on the rest of their portfolio, which was thousands and thousands of customers.
Is that a big part? I mean, is that to pause on that? I mean, so there are a handful of banks in New Jersey, Credit Union in New Jersey, in fact, one of our sponsors.
Yeah.
So there are those who are willing to take the risk. Is what you just said the main reason why others are not right now? So like the large banks
Yeah.
can bank, right? So the memo and all that. So banks can bank if they choose to. It's just seems to be very onerous. And so some are not willing to do, most are not willing to do this, particularly the big banks, the national, international banks are staying away from cannabis. Is it the reporting? Is it just what's the risks that they're really looking for?
Yeah, there's a few things. One is it's onerous. And so the banker has to have a willingness that the juice kind of has to be worth the squeeze for them to take on that extra work.
Very good.
Also, under this Bank Secrecy Act, anti-money laundering work that banks do, there's very few things where the bank board and senior management can both be, civil. They can have civil litigation against them for malfeasance, but with BSA AML in particular, they can also be personally criminally charged if there is degradation in this oversight. And then the other thing we see is if you don't meet the expectations for managing your Bank Secrecy Act, anti-money laundering risk, which this all falls into, then you might also be prevented from doing other things like acquiring another bank, opening another branch. They can limit your business until they feel like you've solved this problem. So this is the one exam when I was a banker that we hated the most, because there's a lot of discretion for the individual examiner, and they're probably always going to find something. It's just depending on the severity of the something that they find. So it's an area where the banker has to have a little bit of a steel gut and has to feel like, hey, this extra work we're going to do, this extra risk we're going to take on is actually going to benefit the institution. And so we'll talk a little bit about what some of those benefits are for the bank and where that gives you some leverage to negotiate.
Excellent. Because that is a big challenge right now, is the fees. People are they're shopping around. There's not a lot of options. So when you have 3, 4, 5 options in a state, fees are generally the biggest concern for folks. Once they can once they can bank their money, that is, of course, what's it going to cost for that money?
Yeah, absolutely. And especially when you factor in 280E and normal business would get to deduct those fees. Most of our folks on the cannabis side aren't able to deduct that fee. It doesn't really fall into the cost of goods category. So what we see, if you think about that cannabis banker real quick, they're going to be validating your license often. And so they're using automation to do that most often. They are doing negative news searches and continuing to validate that the parties that are associated with the business, so those owners, authorized signers, that they all remain on the right side of things, and there's not bad information that comes out about them, because they need to then take action and decide if that impairs the relationship. They're going to be looking at individual transactions. So they're going to risk rate and look at transactions, especially those transactions that they know that fall outside of normal sales activity. If their job is to make sure that the deposits come in are correlated to sales, there will be times when you do things in your business that have nothing to do with sales. Hey, I got rid of I sold a piece of equipment and I got paid for that. That's not part of my state seed to sale tracking, but I'm going to deposit those funds. Maybe I took in a new investor, and so I have capital coming into the business. And so the bank has to isolate those transactions and make sure that they've documented the business purpose for those transactions, so that then when they say, yes, all the rest of the activity was related to sales, they can justify that. They're filing those currency transaction reports when those triggers are hit. They're looking at your aggregate activity, so total sales for the month versus total deposits, and making sure things check out. Doing all that government reporting we talked about. And then you provided a ton of stuff when you open the account to tell the bank about the business and about the individuals. And that FinCEN guidance specifically directs the banks to periodically update that information. And so you'll see that the banker's coming back a year from now and asking for things that they asked you for at the time of new account. Not everything, but there are certain aspects in their policy they're going to say, to meet that requirement that the government laid out, we're going to ask for these things on a periodic basis. And so don't be surprised when those items come up. So why do bankers get in this business, right? Bankers get in this business predominantly for your deposits. And when you think about deposits, you have to really think about them in two ways. One is all the money you deposit into the bank, whether it comes from cash deposits you're making, ACH is in, wires, that movement of money through the bank generally has costs for the bank. That is not the value part. The value part of deposits is what sticks on the balance sheet. So as money is moving through the bank, there's a certain amount that sits in your account, and whatever sits in your account kind of becomes your average balance. All of those aggregated average balances, the bank is turning around and investing those dollars in overnight funds, bonds, loans, whatever that might be. And that's where the real earnings come for a bank. So if I can get a bunch of deposits and they stick to my balance sheet in sort of a dependable way, I can then invest those dollars and make money. And so that's really valuable. So sometimes a customer will come and say, well, I ran $1 million through your bank last year. Yes, but your average balance was $1,000. I could only take of the million you put in, I could only invest $1,000 of it. So I might have gotten some service fees on the dollars that ran through, depending on my fee structure, but I didn't get to invest those dollars. And my big earnings, and for most banks, especially when you look at community banks and community credit unions, anywhere between 70 and 80% of the money they make is from that investment. I take deposits from one customer and I invest it somewhere else, make loans, put in overnight funds, whatever it is. It's a big driver for earnings. So you have the ability to, if you're a big deposit contributor, you're highly valuable to the bank. Non-interest income is really important. So that's just a fancy way to say service charges. So service charge activity is important. Remembering though that volume-based service charges usually have volume-based expenses for the bank. So not all of that money flows to the bottom line, but there's markup there and it's an important part of the revenue. And so you definitely see that in cannabis banking. And Scott, you mentioned the fees earlier. And then earning assets is important also. While for the bank, the lending has not been a huge part of cannabis banking, we are seeing more and more of it. So generally the bank's getting a little bit better yield, or they're getting more conservative underwriting terms, or a combination of both. And so that can be valuable to the institution. So if a normal commercial customer might pay 8% and I can lend out to the cannabis customer and get 9 or 10%, that's a big win, for the bank. And so we'll talk about some of the things that influence why they wouldn't lend. So if you have lots of deposits, you have some options with your bank. One is, as the bank wants you to keep those deposits in the bank. They don't want them going somewhere else. They would prefer you don't distribute them to owners. You know, the more you keep on deposit, the better it is for the bank, because that builds their earnings. And so one of the things that we see banks do in other industries, we're just now starting to see it in cannabis, is that they are allowing you to offset your service charges with a credit for the balances that you have. The other thing that we see in a very specific markets, but it's starting to pop up, is like money market accounts that for your excess liquidity. So maybe I have $200,000-$300,000 that I'm waiting to invest. I'm still building out the store, my grow operation or whatever. I'm holding that dry powder. Ask your bank about, hey, is there a savings vehicle I can put that in? 2 years ago, that would have been, very little money made on those. But now with interest rates being where they are, banks are paying pretty good rates of return on those excess liquidity. So ask about earnings credit if you're a balanced contributor. And if you have a dedicated excess liquidity, ask if you can isolate that, put it into a money market or a short-term CD. Look for least cost processing too. Cash is really expensive for the bank. And so consider, hey, as more and more people get banked, can my suppliers, if I'm in the wholesale channel and I'm supplying folks, one, can I pay my suppliers? If I'm the retailer, can I pay them with a check? And am I willing to take a check if I'm the supplier? And then use remote deposit capture to submit that item to the bank. Look at smart safes. And if you are using smart safes, ask about provisional credit. So provisional credit, what that allows you to do is, every time that armored car shows up at your retail location, that stop costs you money. And so how could you limit the number of stops that are needed? Maybe the money sits in that smart safe for a week or 10 days. But many banks now, once it's in the smart safe, and what makes it smart is the bank will take possession of the funds that are in the safe, and they'll start giving you credit for all or part of those funds. One of the reasons many folks want frequent pickups, it's like, well, I need the money in my account because I've got to pay payroll. Well, hey, if I put it in the vault and it's vaulted and I know armored car is coming, but I only have to pay for that twice a month instead of 3 or 4 times a month, but I have access to the funds, that can be a win-win. Can help you reduce costs, and it can make sure you have the liquidity you need.
But what makes it a smart safe? So is it like a Brink or somebody? Do they offer smart safes that somehow tied to the bank? So there's somewhat of a guarantee that when I'm saying that I've deposited $100,000 in the safe, that there's some validation for that? How does that work?
Yeah, there's mechanics within the safe that will count the money as it comes in.
Okay.
And then there's electronic reporting that goes back out. And so it's almost like walking up to the bank teller and handing the money over to the teller once it goes in that safe. Now, some of them are smart enough to also disperse cash back out if you need it for store operations, but many of them just allow you to deposit money in. A lot of fast food restaurants use these, grocery stores, because they want to get that cash secured off the floor, but they also don't want to have an armored car showing up every day. It's really expensive.
Gotcha.
And then wires actually add a lot of risk and labor for banks. Now, wires are expensive and there's profit in there for the bank, so don't feel too sorry for them. But if you look at ACH origination and you're willing to have a 2-day payment window versus a same-day payment window, originating ACH is significantly cheaper. There's usually some upfront underwriting if you're the originator of those ACHs, but once you go through that underwriting process, it's pretty easy to operate. And many bankers have that as a tool set within their commercial online banking. So, hey, I could pay, I'm retailer number A and I want to pay, or letter A, I need to pay this supplier. I could wire them the funds, or maybe I could just ACH the funds, reduce my cost, reduce risk for the bank, use ACH instead. And then on loans, just remember the bankers are really thinking about collateral value. So on real estate in particular, hey, is there a green value baked into this property? We really need to strip that green value out. So sometimes there's frustration, I think, on the part of borrowers. Are like, hey, this project is $10 million and we want to borrow 60% of that. And I thought that was your loan program, 60% loan to value. And it's like, yes, but that $10 million value is predicated on some of the cannabis attributes of the project. And so we're going to strip those out and say, what would the project be worth without cannabis? So that if we needed to take the property back and it needed to go to some other use, what would the value be then? So we're often seeing that reduction in loan amount because of the green value coming out. And then looking at things like equipment financing, the good news is the salvage market for equipment is getting better and better, but why don't banks like to lend on restaurant equipment? Well, terrible salvage value, right? So when you start looking at extraction equipment, is there a great salvage market for that if I get that piece of equipment back? So collateral is really important, and we see most bankers focused on real estate. That's, in general, that's what they feel most comfortable with, and especially in the cannabis industry. And then they're going to ask you for a personal guarantee. Most small banks ask the key individuals that are part of the business to personally guarantee loans regardless, but especially in a high risk situation like this. And what they're really looking for is personal guarantors that have net worth that's disassociated with the cannabis operation. Hey, I've made a bunch of money over here in commercial real estate. Now I've got this cannabis operation, but when I take that personal guarantee, there's actually something as a banker I could go after for a repayment in the event that this doesn't work out. And that's the purpose of those personal guarantees. So as you look at your ownership and the folks that are on your cap table, who would be willing to be that personal guarantor? And do they bring value to the transaction? If you turn around and put your banker's hat on, will that help the banker underwrite that loan? In some other markets, not quite in New Jersey yet, but maybe it's coming soon. We have like a California banker that's just starting to roll out unsecured lines of credit. So up to $100,000 to use for operating cash for the business. I think as things get more competitive, we might see more of that. And what we talk to bankers about is, hey, if you're getting all that information about their sales and you know all this about their owners and you've done all this due diligence on the business, if things start to go sideways, you're going to know way sooner than you would on your typical commercial client. So maybe you can mitigate some risk there. The last thing to think about, bankers for newer industries generally look at SBA or the USDA for guarantees. Those federal guarantee programs are not available here. And so in other lines of business, they may be willing to make loans to businesses that they just can't do here. Not strictly because you're in cannabis, but because they don't have that extra backstop that comes with that SBA guarantee. So Scott, I know that's quite a bit. I'm happy to take your questions, or if folks from your audience have questions.
Well, yeah, we have a few questions here. So one of the questions I just want to launch from where you just left off on the loan side. So there are some banks in New Jersey that are bank and credit union in New Jersey that are starting to offer loans, start to offer lines of credit. And you just talked about, when things start to get more competitive for banks, they'll start to offer more services like the lines of credit and things like that. When do you start to see that happen? And when do you, we're all waiting for safe banking, right? So we're all waiting for the federal government to get their act together, pass a responsible safe banking act that we could all get behind and blah, blah, blah. But in the meantime, the politics of everything are going to last for a very long time. I don't know that we're solving Safe Banking Act during a presidential election year, right? So we're looking really at 2025 or later before, my personal opinion, when we start to see the federal government start to, even when they pass the law, the regulations will necessarily take a while.
Yep.
So when will these smaller banks start to want to dive in, offer more services? Like, what's the triggering, like maybe you're seeing in other states that we in New Jersey can start to expect?
Yeah, I think there's a few factors at play. One is the size of the market, the number of businesses that are licensed. As we talk with individual banks in New Jersey, they're just like, is there enough for us? Can we build enough of a line of business to put the policies in place and the safeguards and all of those things? And so, the initial rollout in New Jersey, compared to some other places, has been a little bit slower and more deliberate. Maybe you would describe it differently. I'm not sure.
Slow and frustrating for everybody that's on this, but it is nonetheless moving forward. And in fact, I just had a great conversation for the audience here with Jeff Brown yesterday, the executive director of the New Jersey Cannabis Regulatory Commission, and he was sharing information with regard to the speed of process to start to improve. So we're going to see more and more licenses get across the finish line, and then the struggle begins, right? So you get your license and then you need your financing. The cost of money is really expensive. Right. A lot of predators are out there. So getting tied in with a bank and getting somewhat normalized interest rates is really important for folks. And we were talking about how you can position some of these folks so when they are talking to the bank, they're presenting themselves professionally with their team behind them, so that they can get the best value or the best conversation, at least the first start. So how are you helping? Like, how does your company go in and help an individual cultivator or dispensary operator? Like, what do you guys do?
Well, so our contracts are all with bankers. So we work with the banks so that they can bring a program to market. So we help the bank with their policy development. We have custom software solution that helps automate a lot of those tasks that we talked about, and then safeguards and reporting. So our goal is to bring more banks to the market. So take Michigan, where we've been operating for a few years. There's now 21 banks and credit unions in the state that are offering services to the industry. And so from an operator perspective, it's great. The banks are fighting to win good operators business. So I think we'll get there in New Jersey. I think, the other thing that challenges bankers getting into this space, maybe more so next door in New York than in New Jersey, but enforcement matters. And And I know that and I am sure for the licensed operators, it's important to you too. You've spent money and you're operating within the confines of the law and all of the tax consequences that go with that. But when you have places like New York that have pretty brazen illegal operations, that's really scary to bankers.
Sure.
And so we also work with state cannabis regulators to make sure they understand what things look like from a banker's viewpoint and why some of the things that they may choose to do actually make it harder for operators to get banking. Now, I'll be honest with you, we spent more time in New York on that because there was a lot more that needed to be done. Your program in vetting of license holders in New Jersey has been good for bankers. It's been slow to roll out. So I think bankers have been concerned about, gosh, if I build this, will they come? And so
sure.
that news you just shared is really important about the speed of licenses coming.
So that's and you're right. So there's a couple banks that stepped up front, very early on. And then they start to pull back because a lot of the, people are only putting down, $1,000, $5,000 deposits to get a checking account open up. And then it's the hunt for money. And, this is not 2018, not 2019, it's 2023. Interest rates have gone up. Inflation is an impact. Regional banks have collapsed, that have ripple effects throughout. And here we are in New Jersey and people are getting their licenses, but getting across that finish line with capital to start up your operations, to buy your equipment, it's challenging. But I had a call the other day, this is to go into your point, from an individual who will finance equipment. So you're starting to see the trickle effect where people are starting to get a little braver, starting to finance equipment, do the traditional banking and credit union activities. But I guess, what is your sense? So you believe that based on our regulatory structure in New Jersey, that more banks would be willing to get involved? And do you think do you think that the chicken or the egg part would be the more license holders that are out there that are getting funded? Or is there, or do you think some of the banks would start to help and jump out front of that and help get those businesses funded through general business loans? Like you said, with something usually tied to real estate or the equipment.
Yeah. I mean, to be honest with you, lending is hard, not just in cannabis right now. Banks have clammed up. They're really, you look at the recent survey of commercial lenders across the country, this is disconnected from cannabis, but they are all saying, that latest survey said all of them have increased their underwriting, or a vast majority have increased their underwriting criteria, so that it's getting harder for any business to get access to credit. And then you add in some of the cannabis dynamics. So the bankers are first and foremost, they're most hungry for deposits. And so if there's a deposit story that goes with that loan request, that is super helpful. Hey, we've raised this capital, we're going to park it at your bank. We're also looking to gain financing. That helps. You're self-funding part of that loan for a period of time. They're looking for deposits. As far as banks getting in the space, I think two things that we're looking at. One is we're doing a webinar with the New Jersey bankers or podcast next month, and really talking about getting, hey, that next round of banks in, the industry is starting to grow and take advantage of that. In addition, some of our bankers that work in other markets are very interested in doing work in places like New Jersey. So if you're less concerned with your banker sitting in New Jersey, you just want a banker that understands the industry, there's the opportunity to work with folks that have been in cannabis banking for a number of years, understand the risks, and have a well-oiled program. And so one of the things that we do is we have, I think the last screen here is we have a cannabis financial services finder on our website. If you put your information in there, we'll connect you with our banking partners that are interested in your market. We don't collect any fees for that. It's just an introduction to those folks. So, we've got one of our Michigan banks, for example, that said, hey, if you've got good folks in New Jersey, they're looking for banking services, we're interested in talking to them. And we've got a number of banks that fall into that category. So,
and what do you, and so you part of what you would do with, you help mitigate the risk so that you get them more comfortable. So whether it's an in-state bank or an out-of-state bank or financial institution, big part of what you will be doing is part of helping with the compliance, the vetting of potential clients?
Yeah, so we have an underwriting program that we run the licensed operator through that helps the banker to underwrite the client and make it efficient for the banker and hopefully for the licensed operator to provide all that information. And then our software kicks in for the ongoing monitoring piece.
Great, great. Any other thoughts or insights you'd like to share?
Well, Scott, really appreciate your time. And, the bankers who get into cannabis banking are really interested in helping your members have successful businesses. And so, definitely, I know you've got one as a sponsor here, so that's great that they're supporting you. And we also have a number of banks that would be interested in working with your members. So please don't hesitate to reach out if we can be of assistance there or use the financial services finder.
Yeah, no, that would be terrific. And I really do enjoy this conversation, Tony. And I love this introduction because it is the biggest challenge. And I think a lot of folks, myself included, a few years ago, thought that when people get licenses, money will immediately follow. But the climate has changed significantly. So, organizations like yours that can help other banks and other credit unions and other financial institutions to get on board. One of the things I find when I talk to the leaders of these institutions is, and I share this with the group here, loyalty matters. And if this bank is being loyal to you, when Safe Banking Act passes in 2025 or 2026, remember who was there with you first. People like Financial Resources Federal Credit Union, organizations like BCB Bank here in New Jersey. They've been fantastic in trying to onboard people. It's hard, like Tony mentioned. They do ask for everything in your background. They will do background checks on you. You're going to give them your tax returns. They want to know that you are a legitimate business person and not somebody who's going to do some money laundering or some other nefarious activities. So, Tony, thank you very much. Don't go away. I just want to thank our sponsors again, Sprague Energy, New Jersey Cannabis Businesses preferred energy provider, Financial Resources Federal Credit Union, which I've mentioned several times today, Curaleaf, Burton Trent Public Affairs, HBK CPAs, Township Green, Sachs LLP, Dutchie, Puffin, Canada Remedies, and DM Labs LLC. I always come out of breath every time I do our sponsors, which is great. We have that many sponsors. And then Jen, if you could throw up the our October 4th event. This is going to be a great event for a lot of folks. We're going to have people on the financial side there. This is, we call it, the date, speed dating, where we will match up dispensary operators with cultivators and manufacturers and other vendors, security companies. There's going to be a whole host of folks there where our job, the NJCBA job, is to make sure people are meeting the right connections and making the right connections in the cannabis industry. So again, Tony, thank you very much. Really do appreciate all your time and Shield Compliance and your team on helping pull this together.
Thanks, Scott. Great to chat with you and have a great rest of the day.
All right. Thank you, Tony. Thanks, everybody.
Thanks.